Hey institutional traders, welcome to my channel. I'm your trader and trainer, Mr. Paraskol over here. So in today's video, we are going to discuss a very exciting thing in which I'm going to reveal one of my favorite setups, fully back tested and fully proven about a VWAP for fast SPY trades and NAS100. So this strategy using the VWAP can be applied to the SPY as well as the NAS100 trades. And I can assure you with one thing, it's not something which you have already seen or already know about it. With my trapping confluence, you will be able to achieve plus 90% accuracy in the markets. It is not just a simple VWAP setup. If I'm talking about myself, I have also run through thousands of videos telling me how to use VWAP. But this is one such video which can change your whole trading game just by understanding one more confluence which you can add onto it and increase your accuracy and perfectly understand how you can develop your mindset into a professional trader mindset. So moving on to the next slide, you have to understand very basics. What is VWAP? We know that it is a volume weighted average price. If you're a beginner in trading, you can understand that VWAP is like a EMA line. So whenever the prices are moving something like this, the VWAP actually denotes a line whereby the prices are being connected with the help of the volume and not the mathematical averages. So when you're using MAs, SMAs or EMAs, they are actually mathematical computation of the price levels. But the VWAP is including itself another constant which is known as the volume. So basically it reflects the true average price action based on volumes and not the arithmetical and the geometrical averages. It is typically used by institutional traders to identify fair value zones. And yes, you are going to have a lot of examples in the coming slides where I will try to teach you with the proper practical examples of how you're going to use this setup and you're going to trade consistently on this strategy. The best thing is it works for SPY and NAS100. And why does it works best over here is since you already know that the SPY and the NAS100 are highly liquid. So VWAP reacts fast. What we want with some indicators is, as you know, the indicators are very lagging in nature and because of which we are not able to use it on a consistent basis. But when we talk about SPY or when we talk about any index trading in the future and options, the VWAP reacts fast. Unlike Forex or gold, the index prices are governed by the volume. So this is the decentralized volume, or you can say these are the volumes by the retail as well as institutional traders. The whole jock up of all the trades or all the orders that are being punched in the market actually governs these index prices. They are ideal for scalping and intraday trading. Okay, so if you are an intraday trader, this thing is actually gold for you. It also helps you avoid chasing prices. One of the very important or one of the very difficult thing in trading is to chase the prices. We all know about FOMO, and we are going to start with the trading psychology series in the future as well. Hit the subscribe button, guys, because I'm going to come with a lot of advanced content from beginner to advanced. When we're trading in the real markets with real money and with real prices, one of the best things or one of the most difficult things that happens with us is whenever the price is shooting towards the upside or towards the downside, we're always trying to chase this move because we are able to understand or react after the move has happened. So let's say if I buy after this move, most of the times you will see that the price will fall back and you will hit your stop loss. Similarly, if the price is going towards the downside in a very high speed, most of the times you are late to react towards this fast mover here and you try to sell from these levels or these levels, and what you will majorly see is that the price reflects back, or you can say it comes back to your original point and takes out your stop loss. Basically, this strategy will actually help you avoid chasing prices and you will be able to trade near equilibrium. So equilibrium is basically based upon where the most supply and demand zones are present. It is a price level where any rational person would like to buy or transact or sell. When we are trading into such highly liquid zones, you will see that the volatility will start from these zones itself. After looking at the whole video and the practical examples, you will understand the whole decorum of it, that before the volatility or before the volatile move starts, we are able to catch it and grab the whole point. Let's understand a very basic concept of the scalping setup of what we are trying to do over here. The first thing that you have to understand, or the first rule that you have to abide by, is that we are using the time frame of 1 minute. Okay, we are not using 5 minutes, guys. We are not using 15 minutes. It's a pure scalping strategy that I'm discussing over here to get in and get out within minutes and not even hours. So the time frame that we are going to use is 1 minute. We are going to wait for the breakout above or below the VWAP. So let's say the VWAP is something like this, and only if the price closes above this line, then we are understanding that this is a breakout, and the entry will be based on the pullback. And majorly this is one of the points that is gained from my side, from my experience of 100,000 trades that I have gone through. We're going to trap the buyers and sellers. See guys, you have to understand that the game of trading is to hunt other people's stop losses. Okay, you're hunting the other people's money. So this is a zero sum game. There is no manufacturing going on over here that you are able to sell and you're going to make money, by value creation. This is not a value creation game like any other business. When you are, entrepreneurship or you're starting any business, you're creating some values and the money comes from those values. But over here, when you're trading in the markets, no value creation is being happened. So there is no such thing as both the parties will have a win-win situation. Always there will be a win-lose situation in trading. So if you're winning money, you're actually taking money from someone else's pocket. And whenever you're losing money, you are actually filling other people's pockets. So when you are coming to the trading, you have to understand it is about hunting other people's stop loss. It's not even easy to get money out of other people's pocket. Will you allow yourself to give your money to someone else without any specific reason, right? So in trading itself, you're trying to take money out of other people's bank account, which is not an easy game, guys. And that's why that you need to start think like an institutional trader. You need to start thinking about where other people are keeping their stop losses. And what you need to do is that you need to hunt them. So the price is going upside, and you know that these are the levels where the other people are putting the stop losses. You need to start selling and you need to start doing what you need to grab these stop losses. And that's what we are trying to learn over here by trapping where the other retail traders are putting their, buy or sell orders. We are trying to grab their stop losses. So in this strategy, first we will wait for the breakout, and then after a good pullback, we are going to trap the buyer and sellers who are putting the stop losses or who are putting the orders over the highly liquid areas. And now comes last but not the least is the exit, in which we are going to take 1:2 minimum risk reward or the nearest liquidity level. Okay, so now what we are going to do, we are going to move to the real charts and we are going to understand some practical examples so that you can understand how you're going to trade with this setup. And I'm going to tell you guys, it's amazing. I'm not just trying to oversell it. I'm just excited to tell you some new knowledge, which is actually, comes out of experience and not out of creativity or something. So now when we are trying to understand the real examples, try to look at the charts very clearly. And if you have any questions, guys, do not hesitate to ask the question. I'm always available for you in the comment section as well, or you can email me your queries as well. I have put up my email in the description section. You can email me anytime you want. Okay, so now let's move on to the charts and let's understand the game. So over here, I have opened up the SPY chart for you guys. As you can see, it's very clearly. And today is 4th of July. Happy Independence Day to you all, guys. So we are going to backtest it from the July onwards, and you're going to understand what type of trades are being formed from the present date itself. We are not looking at the very far data as well, so that it is not practically biased or time biased. What we are looking at is the recent data and how could we have made some profits in the real future or in the nearest future, in the nearest past. Okay, so to apply the strategy, if you will look over here, what you need to do, you need to go to the indicator section over here, and in the indicator section you will get to the technicals where you're going to write down VWAP. Okay, I have already marked it favorite. You can also use it. Click the star button to make it favorite, and now you will click on it and you will see your screen something like this, where you will see that there are 3 bands over here. So let's understand how the VWAP looks like practically. This is known as the upper band, this is the major middle band, or this is the major VWAP we are talking about, and this is the lower band. For simplicity, today we are going to discuss only the middle band. This blue line is where we are actually looking forward the best opportunities. In the coming videos or in the advanced course, we will understand how to use this upper band and the lower band as well. So for simplicity, what we are going to do, you can use the settings. You can go to the settings part from here and you can untick the upper band and the lower band over here and click OK. So your chart will look something like this. It's a cleanest price action. You will look over here right now. Maybe it is happening that nothing is making sense out of it, but once you will understand how we are going to make some profits out in this market only and how to use this VWAP, you will be amazed how actually it gives you a lot of profits in the markets. Let's start from this day because this is a good consolidation and you might think that this is not working, but I'm going to tell you how you're going to seek opportunities within this consolidating market and you're going to make some money. As I told you in the first step, what we are looking for is a breakout of the VWAP. Either it is going to be towards the upside or it is going to be towards the downside. For breakout to be justified or for breakout to be identified, we need the price to close below the VWAP. So now let's start looking over here. Exactly at 9, our market start over here 9 a.m. If you will look over here, what did happen? The VWAP was coming from the above side. And how did the price react from the first and second candle? You can see the second candle closed below the VWAP. So this is what? This is the identification that the market or the price closed below or the breakout went below the VWAP towards the downside. This is the first identification method that you're looking for because this clears up the direction for you. When you're trading in the markets, the very utmost thing or very important thing that you have to identify what is the direction of the market. If the market is going to move towards the upside or the market is going to move towards the downside. And wherever the market can go, we are going to either looking for buying opportunities or we are looking for selling opportunities. So by layman language, we can say that if the breakout is towards the downside, we are expecting the price to continue towards the downside. If the breakout would have been towards the upside, we would have expected the price to go towards the upside and continue towards the upside only. Okay. So first step, what we saw over here is that the price broke below and closed below as well. So this is a final breakout. This is a genuine breakout of the VWAP. And now what we are looking here for, once the price moves away from the VWAP, we want the price to come back to this line over here, or you want the price to come back to this zone over here. So once the price touches this VWAP, it is very important price should connect with the line. As you can see that there will be so many pullbacks over here. Price broke below, but it never connected back to the major midway or the VWAP over here. So we are not going to trade in such circumstances where the price is not mitigating this major line. We need the price to come to this line and show us what the price is actually trying to do. So once the pullback is over here, now understand very importantly how we are going to enter into this market. And this is the game changer, guys. What we are trying to understand is the entry, okay, which is highly reliable. And once you understand the logic, it will be very different in your approach as well. So what is happening over here is, what we can see is that the price from here, after breaking out, the price tries to turn back towards the upside and goes above and tries to break this level above again. So now there are two conditions that can happen. Once the price has gone above this line and try to break it out, either it will be a genuine breakout, okay, or it will be a fake out. So most of the times you will see that this is majorly a fake out, and that's what we're expecting. If it's a genuine breakout, then we have to wait for another chance. But if it's a genuine fake out, then it is the perfect entry. So what did happen over here? How we are going to identify whether it is a real breakout or a fake out? You will see that every green candle is a buyer candle, right? Every green candle is a significance that the price wants to move towards the upside. And every red candle is also known as a seller candle, or it identifies that the price really wants to move towards the downside. So what did happen from here? After taking a pullback towards the upside, okay, what this specific candle is trying to do? It is trying to go towards the above major VWAP line. And this is where you have to understand that this buyer is responsible. This buyer will be responsible in the future if the price goes above. So this is the major candle where the major people or major buyers are actually longing in. What is happening over here is they're trying to buy with more and more orders, something like this. So what is happening is every buyer is trying to buy from this different price level, something like this. So lots and lots of orders are being placed at this exact level in the market. And what you need to understand is, if this is a genuine fake out, if this is a genuine fake out, what do we need? We need these buyers to fall out. Okay, we need these buyers to fall. And if they fall, that means our conjecture is right, our propaganda is right, that these buyers are going to fail, and henceforth the price is going to go towards the downside. So what will happen from here is, as soon as what will you will see is the green candle, which is trying to break the VWAP, you're going to put your sell entry below this level. You're going to put the stop loss above the high of this green candle, and you're going to target the major liquidity towards the downside. So if you will look over here, as I told you, your exits will be either minimum 1:2 or the nearest liquidity over here. So the nearest support or nearest resistance level, which is also known as the liquidity level, is over here. So what will happen is, you will see that as soon as the price fails to breach above, rather what did happen, the price started moving downside again, and you will see that the low of this candle is broken out. So what you will have is, once the price breaks this previous low, your limit order for selling will be executed, your stop loss will be over here, and your target will be on the nearest support level. Because you're selling, your nearest target should be support, and if you're buying, your nearest target will be at the resistance level. And you will see that the candle was a genuine fake out and not a genuine breakout. So we did what we have actually achieved, the first risk reward towards the downside. Even if you will see that, if you will zoom out in the price levels, you will see this is a whole consolidation zone, but now you will be able to see a lot of more opportunities that you can see in this market. So what did happen from here? The price broke this major support level and actually achieved our target. And again, what did happen? The price tried to go above again towards the upside and try to test this level now. Okay, so this is highly important when you're looking at this VWAP. Try to understand, this was also a resistance and this is also a resistance, but this candle was not able to do what? This candle was not able to breach above this line. So what is required is to understand that this is the major candle where you have to take the decision. So this is another bullish candle which tried to break above the VWAP, but you will see that it failed. And how it failed is, the price moved back towards the downside, and you will see that what did happen, you're going to do the same. So once this candle breaks towards the upside, what we are looking for is an entry zone. And another type of entry zone is over here. What we can see is an inside out candle. So what we are going to do, because there was another candle formed after this level, we are going to place the entry below this level. We're going to put the stop loss above the green candle in the market, and we are going to try to target the nearest liquidity over here. And what you will see is, the price tried to go towards the downside but failed to take out this major major liquidity. Okay, and rather what had happened, the price again moved towards the upside. So this is how you're going to have 1 or 2 stop losses out of every 10 trades, and that is why I told you with more experience you're going to gain more accuracy. And any strategy which we are going to discuss over here, we are going to be very realistic, guys. I'm not trying to teach you something which is unrealistic, that there will be no stop loss or anything like that. No, it is not going to happen anything like this. We are going to have stop losses and we are going to have targets as well. But whenever we are going to win, we are going to win more than 1:2. Whenever we are losing small. So in this trade, what did happen? This trade, first trade was properly profitable. The next trade, what did happen over here? Price actually, consolidated. It did try to go towards the downside, but it didn't fulfill the target. Rather, what did happen? The price went back up and tried to break out once again. Now, this is where you will see another breakout happening. Okay, so continuing, because we are understanding how fast I get the trades in the SPY and what is a scalping setup. So how many trades can we get in a single day and how we are trying to trade on a regular basis. So now what did happen? Again, you will see that after some time, the price tried to navigate towards the upside and you see that the proper breakout has happened over here. Okay, so this is where you have to understand you cannot trade in such zones where the price is trying to close above these levels, because this is a kind of a genuine breakout. Okay, and when such genuine breakouts happen, you need to wait for the proper candles to come back towards the upside, because what can happen over here, after the genuine breakout, the price can go towards the upside, and that's what we are not want to get into. We need proper clear trading signals where we can achieve the highest percentage of our strategy. Okay, so this was a kind of a breakout, and now we are waiting for a pullback to go towards the upside, or we are waiting for the price to come and break towards the downside again. And now what had happened, if you look over here, the price after breakout went back towards the downside, and now this is a new breakout over here. Once the price closes below, that means after giving a new breakout towards the upside and towards the downside, the market is again towards the downside now. So what are we looking for? After the breakout towards the downside, again we are looking for another genuine entry over here. So what we can see is we are going to apply the same principles for entry. After the breakout has happened, we are looking for a bullish candle to go above and fail. Okay, we are looking for failing other people. We are looking for trapping the buyers, because that is our edge in the market. So as you can see that this is one of such buyer which tried to break towards the upside but failed. They're going to put the entry below this level. They're going to put the stop loss on the high of this candle, and we are going to target the nearest liquidity available over here. So over here, this is the nearest liquidity available, and as soon as you will get entry, these buyers failed to actually break the price zone towards the upside. What did happen? The price went back towards the downside and then targeted the major liquidity, the next liquidity towards the downside again. Okay, so this is another trade. So first was profitable, second was stop loss, third was again profitable, and now let's come back. So what did happen from here? The market tried to move towards the upside again, and what we're looking for, either it will be a genuine breakout or it will be a fake out again. So what we are looking here for is something like this. As you can see that this major green candle broke the above side area. If it fails, if these buyers fail, we are happy to sell and we are happy to take the stop losses of these sellers from this level or this level. Okay, so what did happen from here? I will try to target, or I will try to sell below this level again, putting my stop loss at this candle, and I will try to target towards the downside again. Okay, so your minimum risk reward will be 1:2 and your highest risk reward will be the nearest liquidity in the market. So what did happen from here? This was another a fake out. The price tried to go towards the downside again after giving a genuine breakout towards the upside. Price faked out all the buyers, price trapped all the buyers, and then it tried to move towards the downside again. This is how you need to get into the fast pace. This is how you will get majority of the trades. And now if I move on a little bit faster for the saving of the time, you will see that these were also the pullbacks in the market. Okay, the price was consolidating over here again, but it was never touching the line. It was never touching the VWAP. So are we going to trade over here? You need to tell me the answer in the comment section, whether yes or no. And if you have read your answer, that's good. Otherwise, you can pause the video and write the answer. It is a no for the trade. Why it is a no for the trade? Because as I told you, the price needs to talk to this line. Okay, the price needs to communicate with this line very properly. So what is happening over here? This is the next momentum, which we can see that the price came back to this momentum and tried to conversate with the line and tried to break out. And this is the major bullish candle which tried to break out the price towards the upside again. But will it be a genuine breakout or will it be a fake breakout? What we are going to do, we are going to place the trade below this level and we are going to put the stop loss and we'll be targeting the nearest liquidity over here. So this is the nearest support in the market which we are going to target. And what did happen from here? You will see that the price actually went down and hit your profit. Look at this market within, I think it's just 11:22 a.m. in the market, and we have already received kind of 5 trades over here. So first one was profitable, second one was losing trade, third one was profitable again, fourth one was profitable, fifth one was profitable again, and now back to the next trade. What is happening? This is the next candle which communicated with the VWAP, and now you will see this can also be a fake breakout. So once the price goes above or once the price tries to break this candle over here, what we are going to do, we are are going to place the sell trade over here. We are going to put the stop loss over here, and we are going to target the nearest liquidity over here with minimum risk reward of 1:2. But what did happen over here? This sounds to be, or this looks like a genuine breakout. Price actually turned to be higher highs and higher lows and never came back and gave you the entry. So after new higher high has been formed, you're going to, cancel this entry, and now you're looking for buying trades only. And now you're looking for what? You're looking for buying trades because this was a genuine breakout. This is not a fake breakout. No doubt you will be punching the sell entry over here, but you can see that the price failed to connect with your entry and you will never get an entry over here. So what did happen from here? After the price gave us a genuine breakout towards the upside, now the direction has changed. The coin has flipped and we're looking for buying entry now. We're not looking for selling. And for again looking for the buying entry, we need the price to connect with this line. And what did happen? The price once tried to take a pullback over here, tried to move towards the upside, came back, and now it is communicating with this line. So similarly, all the price action which we have used over here by trapping the buyers because we were selling, now because we are buying, we are going to trap the sellers in the market. And look at over here what is happening. The first seller that actually came to this level is over here. Okay, the first seller which tried to break the line towards the downside is over here. And as I told you with this example, the same example we discussed over here, if the next candle is inside out, we are going to take the trade from the inside out candle. So we are going to apply the same principle over here. Over here, what we are going to do, we are going to use the entry from here. We are going to put the stop loss on the low of this candle, and we are going to target the nearest resistance in the market. Since we are buying now, we are not going to target the support. We are going to target the resistance. I understand, guys, you might not be able to catch the whole setup in just one video, and that's why I urge you to watch this video again and again till you're getting every ounce of it. You need to get every ounce of it. You need to get every aspect of it. Only after understanding each and every aspect of it, you will be experienced with this setup. And I'm telling you, this works a lot. Even if the market is consolidating, I can show you hundreds of examples in the coming videos as well. Even if the market is, highly volatile, you will get most of the trades right. If you have understood the strategy, you will be able to look at these trades with the naked eye without, looking at the very deep. So as I told you, with experience, your accuracy is going to increase in the market. This is just a kind of a practical example where we are discussing this type of setup for the first time. There will be further more videos into the advanced level, and those who want to actually learn this proper setup, they can also communicate. And if you have any queries, guys, you can email me at thenovalasset@gmail.com. I'll share my email with you in the description section, guys, as well. But this is how a genuine professional trader thinks like. Okay, there might be a trade or two which might not go according to your plan, but that's okay, because most of the times when you will trade like this, even in such a consolidation where other things or other concepts are failing on a daily basis, you might be able to get better returns or better consistent returns which you're actually fantasizing about. This is how institutional traders are mapping their own charts accordingly. Okay, now we are going to back to the slides and we're going to understand do's and don'ts of this strategy. So hold on for just one more slide and you can understand the whole setup properly. So coming back to the slides, here we are going to discuss some do's and don'ts which you need to keep in mind while you're trading with this setup. Is avoid trades which are far from VWAP. As I told you as well, when the VWAP is something like this, but the price is over here or over here or over here, you don't need to take the trade. You need to take the trades on the price levels which are communicating with this line, which they're talking with this line, guys. Use VWAP with the trapping for confluence. As I've told you, we need to trap the buyers while we are selling in the market. So if the price is downside and VWAP is something like this, we need the buyer to come and communicate with this line, try to break through, and we're going to trap this buyer and sell, and will try to target towards the downside. Similarly, if this is such a case of buying condition, we need the seller to come and we need to trap this seller while actually buying in the market, and we will be targeting the liquidity. Okay, best time to trade is around 10 a.m. to 12 p.m. So this is the opening session strategy, guys, and this is what you will be doing in the first opening session. You will see most of the trades are going to go with this confluence. I hope you understood this video, guys. It's not very easy. I'm not saying it's an easy thing to understand, but it's not very hard, because other strategies which we have compared, this is one of the very basic strategy for every kind of trader. Whether you're a beginner or you're an advanced player, you can always make some money out of it. Okay, the whole purpose of the trading is to make money out of it. As simple as it. And the money can only be made when you're into that zone, or when you're into that mindset that you are not looking here some kind of dollars with some kind of profits. You need to hunt other people's stop losses to fulfill your own pockets out of their losses. I hope you understand and do like the video, guys. And if you have any queries, you can write it in the comment section, or you can also email me. Do follow the channel for such more videos, because I'm going to come with a lot of education which is actually at par, and you're going to find the worth in every video. Okay, guys, till then, hasta la vista.